Alright, what's going on, everyone? Hope everybody's had a good weekend so far. We got a lot of data to uncover from CPI all the way to FOMC interest rate decision, recession fears, housing data coming out this week, and possible bullish seasonality. So let's go ahead and get into it, okay? Alright, so economic data recap, some main points we want to just kind of pull out from last week's data. Core inflation rate year over year, along with inflation rate year over year and month over month, all came in lower than expected. This is the second consecutive month of CPI data that we've had come in lower than expected. So we are in this disinflation era. So if you don't understand what disinflation is, or you've never heard of disinflation, it just mainly occurs when price inflation slows down temporarily. So we're seeing this inflation kind of go down a little bit. Now, if you go to the store, grocery store, a lot of those prices are still very, very high. And that doesn't mean that this inflation and everything's gone down, but the speed or the increase of inflation is slowing down, and we're starting to possibly see that. We possibly saw that peak 2 months ago, and we're starting to see that slow down now. Now, this does not mean that inflation can't pick back up, but a lot of the market is starting to price in kind of putting in inflation in this rearview mirror. A lot of the worries now are on this looming recession. So we saw on the CPI data came out, the stock market absolutely boomed. And then we saw this sell-off all day long. Along with the FOMC interest rate decision, we had the 50 basis point rate hike, and then we saw this huge drop. Now, we didn't get that super dovish Jerome Powell, but we also didn't get the super hawkish Jerome Powell either. He was kind of in the middle. So I want to just kind of speak out. So we're having this giant looming fear of a recession. What does this mean going forward? Well, sadly, the bad news is good news and the good news is bad news kind of rhetorical area is all over with. We're going to start seeing more of this bad news for the economy is bad news in general. So bad news is bad and good news is good is going to start coming back into the market probably as early as January. Just mainly because this looming recession, you don't have to have a labor market absolutely fall off to be in a recession. Just the main question is when and how bad at this point. Now, we've seen Jerome Powell and multiple other Fed officials, they continue to say that a soft or softish landing is possible, but the more data that we've seen come out, manufacturing PMI numbers just continue to fall off. We're seeing wages continue to go up a little bit. We're also seeing this labor market start to slip a little bit as well. So we're possibly seeing I expect recession about mid 2023, or a little bit later than that, just mainly because the labor market is very strong. And we've had this 10 years of this bullish run. So this possible recession is the main question that everybody is really going for, and they're kind of going risk off. All right, so looking into this week coming out, we're not short of any data, especially right on this week right before Christmas. We have housing starts, building permits. We have some other housing data coming out as well. We have CB consumer confidence along with the Michigan consumer sentiment coming out, GDP growth rate, durable goods, and then the core PCE price index and the PCE price index year over year data coming out. Remember, the Federal Reserve watches the core PCE data mainly just because it does not include a lot of those volatile numbers. And I expect it to be down as well coming into this month. Now, I'm very interested to see where the housing market and stuff really sits right now, because you continue to see these home prices continually going down, but at the same time, with the looming recession, you don't see a whole lot of people buying houses right now either. So I'm really interested to see what this data continues to say. But historically, this week is very bullish. Does that mean that we're going to be bullish this week? No, it does not. But I will break out some reasons why we should be a little bullish, possibly short term this week. So let's go ahead and take some look into technical analysis real quick. By here, we saw right before this right before the Federal Reserve interest rate decision, we saw that we came up on some double resistance right here, and we've been pushing down ever since. So you see the daily on the stock RSI, it's continually pushing down. We're going to about to be into some oversold area, along with the MACD starting to try to push a little bit lower. So long term, we very well could continue to still be going down, especially with the looming recession pressures going on and the terrible data coming out. Now looking at SPX here on the daily, we see the same thing. We had a little bit of support right here, just blew through that on Friday, along with the stock RSI and MACD looking the same as SPY. So long term, I'm still pretty bearish here, and we had Apple just completely break its support on the daily, and I think if we don't bounce here this week, I think Apple really sees a new low of this year at least. And then, but what I really want to bring out is we're seeing the stock market completely fall right now, but at the same time, we're seeing the yields fall. But I want to point out here that we are starting to see this kind of convergence going on with the stock market and the bond market. So this is where I'm really leaning that bad news is about to start being bad news for the economy. Just mainly because they're starting to back off rate hikes. You have recession looming. And, the stock market was originally going with the bond market, but we're starting to see that convergence now. So I think that we could start seeing as soon as January, the very first week of January, I think we could start really seeing this bad news is really bad news for the economy. So I wanted to point that out, along with possibly why we could be a little bit bullish going into the beginning of this week. We have the MACD on the 30-minute time frame on SPY completely oversold, or just needing. I mean, somebody needs to bid. We have two really big gap fills all the way up to the 400 area. I do not think we will hit 400 this week. I repeat, I do not think we will hit 400 this week, but I do think we possibly could see a retest of 385 to 390 area. And if you don't know what bullish divergence, bearish divergence is, it's just mainly you see the stock market going down, and then the RSI, or the relative strength index, is moving upwards. So you see right here, you can see this bottom, 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 but it continually is moving up, which is that bullish flow with the negative push down in the stock market. So we could have possibly saw a little bit of an overreaction this past week, but remember, I still am very long-term bearish. I think we still do get that one last leg down. We filled this one gap fill around 381 area, but we still have this big gap down all the way down to 357, but I'm still not going to be holding a long position just yet. I'm waiting a little bit longer to kind of figure out. I'm going day to day right now. But long term, I still see a little bit of a bearish push, but I think we could get a little bit of that bullish seasonality going on this week, depending on what that data and everything states. So if you like this video, don't forget to please like and subscribe. Thank you all to my followers. If you have any questions or anything, just leave them down in the comments, and I'll try to get to them as soon as possible. Everybody have a great weekend. God bless.